As Al Baraka Turk, we were founded in 1984 by pioneering interest-free banking in Turkey and began actively serving in 1985. Al Baraka Turk has been the stability and pioneer of participation banking for 40 years. Al Baraka, Pioneer Banking.
DDCAP Group operates in the global wholesale financial markets, providing intermediary services globally to financial institutions that adhere to Islamic and other responsible codes of financial practice. Ethos AFP was innovated to support the interbank and capital markets trade requirements of Sharia-compliant financial institutions. In 2021, DDCAP announced Ethos Terminal, the latest evolution of Ethos AFP, a multiple award-winning automated trade and post-trade services platform. Ethos Terminal brings additional integration functionality to DDCAP clients via an open market environment. This enables users full discretion in choosing trade counterparts and has been developed in response to user demand and Sharia preferences. DDCAP continues to invest in Ethos AFP, working with partners to deliver cost-effective, fully integrated automated solutions to provide our clients with a dynamic platform for their treasury and capital markets activity that also aligns with their Sharia, sustainability and corporate responsibility requirements. DDCAP aspires to connect the global Islamic financial market responsibly, and the development of Ethos AFP and its functionality is integrated within DDCAP's corporate policy formation, including our Sustainable and Responsible Actions Programme and the review and validation processes and procedures of our esteemed Sharia Supervisory Board.
Assalamu alaikum wa rahmatullahi wa barakatuh. Distinguished guests, speakers, and participants, ladies and gentlemen, a very good morning, afternoon, and evening to all of you wherever you are. On behalf of the General Council for Islamic Banks and Financial Institutions, I have the honor and pleasure of welcoming all of you today to this webinar on Islamic social finance, assessing Islamic banks' current initiatives and potential impact. Ladies and gentlemen, CIBAFI recognizes the vital role of market-related research in guiding and shaping the future of the financial sector. Through comprehensive surveys, insightful research, and informative publications, CIBAFI aims to promote excellence, innovation, and identify emerging opportunities within the Islamic finance industry. In this context, today's webinar will highlight the main results of our annual report, Global Islamic Bankers Survey 2024, focusing on Islamic social finance, assessing Islamic banks' current initiatives and potential impact. Throughout the session, our distinguished panel of speakers representing diverse expertise in the field will discuss the opportunities and challenges in Islamic social finance. We will explore strategies for advancement and highlight collaborative venture and partnerships aimed at enhancing this field and much more. Ladies and gentlemen, before we start, we would like to make a couple of announcements. If you have any questions throughout the webinar, please do not hesitate to write them in the chat section, and we will try our best to answer these questions as much as we can. The webinar will be recorded and posted on CIBAFI social media platforms in the coming days. Please follow us on social media for more information. We will also appreciate your kind feedback on the organization of the webinar by filling out the evaluation form for the webinar. Now, without further ado, I have the pleasure to call upon Dr. Abdelilah Belatik, Secretary General of CIBAFI, to deliver his welcoming remarks. Dr. Belatik, the cloud is yours.
Thank you, Rashid. Bismillah ar-Rahman ar-Rahim. Wassalatu wassalam ala Mawlana Rasulillah wa ala alihi wa sahbihi ajma'een. Distinguished guests, dear colleagues and friends, Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, good afternoon, or good evening to all of you wherever you are. It is a great pleasure to welcome you all to this webinar for the launch of CIBAFI's Global Islamic Bankers Survey 2024. Your presence here today underscores the importance of our collective efforts in advancing Islamic finance and its role in addressing crucial social and economic challenges. First and foremost, I would like to express our sincere gratitude to our partners who have supported the Global Islamic Bankers Survey over the years and again this year. Your continued collaboration and trust in CIBAFI's work are invaluable, and we are deeply appreciative of your commitment to the development of Islamic finance. This year's report focuses on a topic of utmost importance: Islamic social financing. In a world grappling with persistent economic challenges and geopolitical tensions, the role of Islamic finance in promoting social welfare and sustainable development has never been more critical. Our survey indeed revealed that noteworthy insights. For instance, we found that microfinance is perceived as having the highest potential for advancing Islamic social finance, with over 60% of banks indicating it has substantial or very great potential. This underscores the growing recognition of microfinance as a powerful tool for financial inclusion and poverty alleviation within the Islamic finance framework. The report also highlights the increasing importance of technology in Islamic social finance. Many banks are leveraging digital platforms and innovative solutions to enhance their social finance initiatives, indicating a promising convergence of fintech and Islamic social finance. The findings align closely with CIBAFI's ongoing work and initiatives. 2 years ago, we have issued our sustainability guide, which has been instrumental in helping Islamic financial institutions integrate sustainability principles into their operations. And more recently, following up on this work on sustainability, we launched 2 professional certificates programs, one on sustainability management for Islamic finance and another on product developments. These programs aim to equip professionals with the knowledge and skills needed to drive innovation and sustainability in Islamic finance. And we are planning for a series of sessions on these 2 programs for the next few weeks and months. I'm also excited to share that in the coming weeks, we will be releasing our digital transformation guide for Islamic financial institutions. This guide will provide crucial insights and practical strategies to help our members navigate the rapidly evolving digital landscape, ensuring they can leverage technology effectively for social finance initiatives and overall operational efficiency. Further, we start in our aim of supporting Islamic finance industry. We start ongoing new projects, some of them focusing on big data and data analytics in Islamic finance. This initiative aims to explore how these cutting-edge technologies can be harnessed to enhance decision-making, improve risk management, and ultimately support more effective social finance programs within our industry. These projects, alongside our ongoing work on governance and many other initiatives, reflect our commitment to addressing the evolving needs of the Islamic finance industry, particularly in the realms of technology and social impact. Before we delve into the details of the session, I would like to express my heartfelt thanks to our distinguished speakers who have agreed to share their insights with us today. Your expertise and perspectives will undoubtedly enrich our discussions and provide valuable food for thought. I look forward to fruitful deliberation and exchange of ideas during this webinar. May our discussions today contribute to the advancement of Islamic social finance and its positive impact on communities worldwide. And now it is my great honor and pleasure to welcome our keynote speaker and dear friend, longtime friend, Professor Emeritus Dato, Dr. Azmi Omar, President and CEO of INCEIF, Malaysia, who has been instrumental in advancing Islamic social finance in its various ways and foundations. Professor Azmi, the floor is yours. Thank you all once again for your participation.
Yes, thank you very much, Dr. Abdelilah Belatik, Secretary General of CIBAFI, distinguished speakers, participants, ladies and gentlemen. Assalamualaikum warahmatullahi ta'ala wabarakatuh. And again, good morning or good afternoon or good evening, depending where you are located. First, I would like to thank personally Dr. Abdelilah Belatik for inviting me to share a few words in the context of the launching of the report on Islamic social finance. I'm also glad that CIBAFI has taken the initiative to develop the sustainability guide, which was mentioned earlier on about 2 years back, and subsequently has expanded the role of sustainability within the Islamic banking sector. And subsequently, of course, that can be implemented in other financial sectors as well, for example, takaful and so on. I think today the topic is on Islamic social financing. Being an academic as well as somebody who is involved directly in Islamic banking, takaful, and Islamic finance industry, I think what I would like to begin with is to look back, to take a step backwards and look at why banks should get involved in social financing, social work. As we know, historically, banks are financial institutions, business entities. The focus is to maximize profit. But subsequently, there's a lot of backlash against the focus on maximizing profit, so much so that it has to go beyond profitability or profit maximization. Therefore, the term like stakeholder capitalism, shareholder capitalism came on board and being promoted until today. And subsequently, from 2000, we have the Millennium Development Goals, and 2015, we have the SDG goals. The whole idea is to say that banks, being important financial institution in a country and globally, has to take on the responsibility looking after the environment, the social, as well as the governance component. But of course, here today, we are going to focus on the S part. That is the social component. Okay. Why is it important for us to look at that social components? One, if we look in the context of Islamic banks pay zakat. Apart from tax, Islamic banks pay zakat. And zakat is one of the Islamic social finance instruments. Likewise, we have wakaf, we have microfinance, and we have sadaqah. So zakat is a very powerful tool if it is done and managed properly. Let me share with you, for example, what are the things being done in some of the Islamic banks that I know of, both in Malaysia and in many other countries, is that zakat is used to support social activities. It is not CSR. I would like to again reiterate, because some people tend to think that using zakat is like using CSR. We have this project that we have in mind at the end of the year. We have CSR fund, and we can add on zakat, and therefore, wow, we have something great. We can support certain social objective. No, to me, it should be beyond that. It should be more focuses, targeted, programmatic approach to address certain objectives. So let me share with you, for example, in the context of Malaysia, when Bank Negara, the central bank, introduced in 2017, the value-based intermediation, the whole idea again is to look beyond Sharia compliance, to look at achieving the maqasid Sharia. We always, if you have been in Islamic finance industry, both as a practitioner and researcher, I started my involvement in Islamic finance industry way back in 1983, when Islamic Bank was first established in Malaysia. And I've seen the debate, how it evolved over the years. One of the things is that we would like to see not just meeting the Sharia requirement, but banks fulfilling that the E, the S, and the G component. Okay, so here, as I mentioned, we focus on the S component. So what can the bank do in this particular context to support the social financing part. So for example, in Malaysia, since 2017, about 300 billion ringgit is used under the value-based intermediation. So 300 billion ringgit is equivalent to about, I would say about about almost like 700 million US dollars has been used for the E, the S, and the G financing. There are other financing, but the E, S, and G focus is about close to about 800 million US dollars since 2017. So the emphasis on really ensuring that you have a programmatic approach to address certain social issues. So out of this 300 billion ringgit, or about about 700 plus million US dollars, about, I would say about 40% is to support the micro SMEs. Dr. Abdelilah mentioned earlier on about the microfinance is very important. So microfinance should be used to support the small and the micro entrepreneurs. So about 30% is used to support the micros, small and medium enterprises. And we know microfinance, we can use microfinance using the Islamic principles, not only in terms of murabahah, but also mudarabah is being used to support them. Secondly, it is also used about 15% for affordable housing. Again, we need to address, in many countries, housing is in shortage. So affordable housing, how we can use social finance to support affordable housing. I'll give an example in Malaysia. I think one of the key things is that we have many Muslim countries, we have waqf land, okay, and waqaf land. So those lands are typically either for mosque, cemeteries, but how can you use the waqf land for affordable housing? So what is done in this particular case is that an Islamic bank provide end financing for customers not to buy because it's waqf land, to lease the land for 99 years. So an Islamic bank provide financing to customers, to poor, to what they call it, the bottom poor, for them to buy affordable housing in waqf properties, and they get to own for or get to lease for 99 years. Then, of course, at the end of 99 years, the land goes back to the waqf authorities. So banks provide that kind of financing. So again, as you can see, you have waqf properties and you have commercial finance from Islamic banks providing financing to support affordable housing for the poor in the country. Okay, so that's another example. The other example is where we can use Zakat fund to provide capacity building. And the term among the multilateral financial institutions, we call them blended finance. Okay, blended finance. So Zakat funds is being used to support the poor, one for the capital, for the capacity building, to train them. The small and micro entrepreneurs, they do not have the skills to do business, so they need to be trained. So that training component is funded by Zakat. They need certain machineries and equipment. So those machineries and equipment can either be funded through Zakat or through Waqf. So those are the various models that we can use under the principles of blended finance. So in that way, an Islamic financial institution goes beyond just providing commercial financing for middle class and for the upper class. So here, it goes to different spectrum of the population, from the very poor right to the upper income individuals and companies. So it's a matter of how we look at the financing and how we can address issues faced by populations or businesses in a particular country. Apart from that, of course, we would have deposit financing, deposit accounts, where deposit accounts are associated with sustainable goals. For example, where you can place your deposits, what we call CASA, the current and the savings account, and part of the return is not given back to the customer, but given for specific social purposes. So that's an example that can be done. In terms of, for example, crowdfunding platforms, a digital bank can provide a crowdfunding platform for specific social projects. For example, in Malaysia, we have one of the Islamic banks. They create a digital platform they call it Global Sadaqah, where you can then you choose which projects you want to fund, either using your zakat, your sadaqah, or your waqf funds. So those are some of the potentials. And finally, of course, which is very important nowadays, for the private wealth, you have investment opportunities. Banks support investment opportunities, either through a combination of waqf and commercial return. So if you put under waqf, what basically it means that the return that you get, you will forgo for a certain number of years, because that fund will be a temporary waqf. And then let's say if the fund is for 3 years, so over a 3-year period, the return will be given for certain charitable activities. And then at the end of 3 years, you get back the principals. So there are various models that bank can use to address social issues in a particular country. As I mentioned, an Islamic bank can no longer focus purely on profit. It has the responsibility to look at the environmental issues, to look at the social issues, and to look at the governance issues, for example, labor and so on. This is very important today because banks have bigger responsibilities and role, rather just purely in the context of focusing on maximizing profit. I always say this when I was in IDB and many other places: before you sleep at night, think about what you have contributed to the Ummah, not how much profit you have generated for that particular financial institution. Again, thank you very much. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you so much, Prof. Azmi Omar, for your keynote address. I would like also to thank Dr. Abdelilah for his opening remarks. Ladies and gentlemen, to set the stage for our discussion, I will begin by highlighting some key findings from the Global Islamic Bankers Survey 2024. For that, allow me to share my screen. So the Global Islamic Bankers Survey is an initiative that started in 2014 under the strategic objective research and publications. And since the establishment of this initiative, we had 8 editions of the Global Islamic Bankers Survey report. These 8 editions covered various topics, including topics related to growth drivers, sustainability, digital transformation, fintech, women empowerment, talent management. And the 9th edition of this year covers the topic of Islamic social financing, assessing Islamic banks' current initiatives and potential impact. So the structure of the report is similar to previous years. So we have 2 main sections that are constant throughout the various editions. The first one covers the CIBAFI Islamic Banking Confidence Index, that covers the optimism level regarding the future of the industry, and also some key concerns that are reported by Islamic banks. The second edition covers the risk dashboard, which highlights the most important risks perceived by Islamic banks. And the third section is the thematic section, where we address the topic or the theme of the edition. So for this year, this section, the thematic section, which covers the broad topic of the role of Islamic banking in Islamic social finance, is divided into 4 subsections, starting with the Islamic bank's engagement in some social finance initiatives like philanthropy and risk-sharing financing, then looking at the opportunities and challenges, the strategies that are deployed by Islamic banks to advance social finance, and then the last point covers the partnerships and collaborations for enhancing social finance. So in terms of responses, we have received a significant number of responses, similar to previous years. The number of responses is 95 Islamic banking executives from 30 countries. So the analysis of the report covers responses from various backgrounds and markets, allowing a comprehensive overview of the experiences of Islamic banks across different regions. The survey respondents for this year comprises a diverse range of Islamic financial institutions, including full-fledged Islamic banks, or around 77%, followed by Islamic banks or Islamic bank subsidiaries, around 13%, then Islamic banking windows of conventional banks around 8%, and other Islamic financial institutions, which covers Islamic development banks. And in terms of global core business, so the main business of the respondents is retail and wholesale with a balanced distribution, followed by the investment banking. In terms of size of the Islamic banks, so the majority, or around 75% of banks that participated in the survey are considered small banks, meaning that their asset size is between 1 to 5 billion US dollar, and 25% are considered larger banks, meaning that their asset size is between 5 to 10 or above 10, from 5 to 10 billion US dollar. In terms of the findings or the key points from the first part, so the future outlook for both Islamic banking and conventional banking remain positive, with global optimism score holding steady at 3.8 for the Islamic banking and 3.7 for the banking sector in general. And in terms of the regional distribution or the regional breakdown, we can see that the most optimistic regions for this year are the Southeast Asia and Sub-Saharan Africa. For the concerns, technology or information technology remains the most challenge for Islamic banks in the future. Then also we noticed rising concerns over meeting shareholders' expectations in dynamic markets, and of course the concerns related to customer retention or attraction remain a central focus for Islamic banks. In terms of risks, this is really aligned with the results from the concerns. We can see that technological risks at the forefront, with cybersecurity risk ranking first with the score of 3.7, followed closely by, in the third position, by technology risk at around 3.6. And we noticed also a slight increase in credit risk, which can be resulted from the global challenges such as the geopolitical issues and also the inflation. With regards to the section or the thematic section of this year, to gauge the perceived potential of various Islamic banking products in advancing social finance, the participants evaluated 6 mechanisms. With the exception of saving accounts, most participants or most respondents believe that these mechanisms have substantial or very great potential for advancing social finance. Microfinance is considered to be or to have the highest potential for advancing Islamic social finance. In terms of, or to understand the results further, we asked Islamic banks about their level of engagement in providing the proposed list of products and services, and the results reveals varying levels of engagement across different financial products and services, saving accounts are considered the most widely adopted. And for more insights, we also asked the banks to indicate to what extent they are involved in supporting specific segments through Islamic social finance. The results indicate that the participants are moderately to substantially involved in various segments through Islamic social finance, with the highest engagement in supporting micro, small, medium enterprises and education and capacity building. For Islamic social finance has a variety of instruments and initiatives designed to promote economic and social well-being in accordance with Islamic principles. So in this context, we ask banks to identify the areas that hold the greatest potential for development. And as you can see from the result, microfinance ranked first, followed by crowdfunding. We also asked the banks about the motivating factors for the institutions to be involved in social finance, and all elements that we've provided ranked high with close scoring. However, two factors received the most focus were supporting, and these are supporting sustainable development, for instance, financial inclusion, as well as building social capital and strengthening the bank's reputation. And financial return ranked last as a motivating factor. In terms of obstacles, the result indicates that all the obstacles score were relatively close to each other. The primary obstacles for banks in engaging in Islamic social finance are the lack of awareness and understanding among stakeholders, and as well as the shortage of qualified professionals and the absence of standardized regulatory framework. As you know, the collaboration and partnership is very important when it comes to social financing. So we asked banks to indicate their status of engagement in partnerships and collaborations. And the results show that the majority of participants are either involved or they are planning to do so in the future. The institutions that are targeted through these partnerships are Islamic philanthropy institutions such as Zakat and Awqaf organizations, and followed by traditional Islamic or Islamic government agencies, and then followed by the other financial institutions. So to summarize these findings, despite the ongoing global economic challenges and geopolitical tensions, Islamic Bank's executive maintained a stable and optimistic outlook, and the CIBAFI Islamic Banking Confidence Index reflects confidence in the sector resilience and risk management. Key concerns that are identified include adapting to technological advances, managing shareholders' expectations, and maintaining customer relationship. Islamic banks are also actively engaged in social finance with a focus on microfinance, and there are emerging opportunities in areas like MSMEs, healthcare, and sustainability. There are also challenges that includes awareness, professional shortage, and regulatory standards. So overall, banks are making progress in social finance through partnerships with governments and philanthropic organizations, enhancing their impact and reputation. The report of this year also provides a number of recommendations for the different market players. So there is a need for a continuous enhancement of digital infrastructure taking into consideration new trends like AI, cloud computing, and data, and to enhance the efficiency of the operations and also cybersecurity and the customer experience. Also, there is a need in light of the global challenges to strengthen risk management practices and dynamic business strategies in order to navigate any negative impacts that could result from these global challenges. Then to focus on capacity building and continuous learning in order to be able to develop some innovative thinking and to develop products and services that could meet the customer needs. And then also to emphasize on the stability and the ethical principles of Islamic finance and all the characteristics of Islamic finance in marketing strategies to attract customers seeking principled financial options. Also there is a need to focus on high impact areas like sustainability and financial inclusion, and expand successful programs like microfinance to drive positive community outcomes. And large banks should also support small banks, so there is a need for collaboration between different institutions in terms of size to support initiatives related to social financing, and also to create comprehensive measurement and reporting frameworks to track any impacts that could be created by these initiatives, and of course collaboration and partnerships. And with this, ladies and gentlemen, I will call upon the distinguished speakers so that we started the discussion of this webinar. And let me introduce our speakers. So first we have Mr. Nabil Kesraoui, founder and CEO of FinDev Advisory from Tunisia. Then Mr. Mohamed Fikri Naim bin Harun, he is the general manager of the collection division at Lembaga Zakat Selangor from Malaysia. And Dr. Abozer Mohamed, senior Islamic finance specialist at the Islamic Development Bank Institute from Saudi Arabia. And Mr. Osama Bishari, head of microfinance at Assaray Trade and Investment Bank from Libya. Thank you all for joining us. So my first question, or to start the discussion, we talked about, I mean, in the theme or the theme of this discussion is related to Islamic or social finance in the context of Islamic finance. So my first question is to Dr. Abozer Mohamed. So how can we how can the principles of Islamic finance enhance the effectiveness of social finance initiatives, and what specific aspects of Islamic finance are most beneficial in this context?
Thank you, Brother Rashid. A greeting from Islamic Development Bank, and greetings to the participants, which reached over 100. It's a great success to CIBAFI. Also, our thanks to CIBAFI for issuing the flagship of CIBAFI of report. We're looking forward to receive the report after issuance, inshallah. So when we talk about Islamic finance and how Islamic finance is really supporting social finance, we have to go back again to the principles of Islamic finance itself. We can see Islamic finance has inherited rules and principles designed to balance society of wealth between people, and also to avoid any exploitation of rich against poor people. Also, we need to understand also among the unique feature of Islamic finance, we have risk sharing, which is mostly used by banks, and also capital market for Islamic collective investment scheme. We can see in Takaful, we use Tabarru as well. When we go for like even non-Sharia compliance kind of activities and businesses in bank, we see Islamic banks cannot use it, and then they have to forfeit to charity and to help the society. So all those kind of fairness and ethical values within Islamic finance are part of Maqasid al-Sharia, which is protecting people and wealth and everything. And also we have to go back to the main idea of Islamic finance, when God said all the wealth and resources in this universe is belong to Allah, and we are just an agent on behalf of the God. So we have to utilize it in a very good way, and we have to act in a very manner ways. So social finance within Islamic finance industry is broadly comprises traditional Islamic finance philanthropy such as Zakat, Sadaqah, Waqf, and Islamic microfinance institution, which aim and use these resources for the benefit of the Ummah. Again, we link it back again to the main concept of Islamic finance itself, as we are agent of the God on this earth. So by using those kind of mechanisms, we introduce, help fund and raise and distribute wealth between various segments of the society. Also, the risk sharing is one of the fundamental criteria in Islamic finance. It will help entrepreneurs and those who are not managed to tap finance to get an access to finance through those kind of channels, and also to distribute risk between both parties. And also it will allow entrepreneurs not to burden themselves with an extensive riba and interest. Then we go back to Zakat and Waqf and Sadaqah, which has been in very instrumental tools used in the alleviation of poverty and development over the last 1,100 years. They use them in education, business, healthcare, infrastructure, development, and improvement. So Sukuk now is playing also a better role. So we can see in banking, we use most of the things to encourage social financing by having risk sharing and also financing for SMEs and microfinance. But also when we go for capital market, we can see Sukuk is also being one of fundamentals through an instrument for social finance, where Sukuk is also being issued and the proceeds can be used for social activities and also to support environment. We have to understand also part of the social finance is protecting environment. So by using those proceeds, we can manage to fund for activities for the environment, and also we can issue a target sukuk for youth and women, which is usually done by Islamic Development Bank in most of the cases. So also Zakat is considered like a redistribution of wealth between various segments of the society in Islamic finance context. So Zakat, as Prof mentioned directly, Prof Azmi, it's, the bank will collect Zakat on behalf of their clients, and also the banks themselves, they have to pay Zakat on the profits they made. And this kind of Zakat will be distributed and channels to different segments in the society. And by doing that, actually, they contributed to alleviating poverty. So distributing wealth between different segments. Finally, we have microfinance. And as we can see, microfinance in Islamic finance is one of the most fundamental elements, where the banks, institutions are always try to provide finance to those who are needed, like small segments, women, youth, and poor people. So by doing all this kind of activities, we notice Islamic finance really focuses on community well-being and emphasizes also in the financial inclusion of poverty and community as well. Thank you, Brother Rashid.
Thank you, Dr. Mohamed. Thank you for these insights. We'll have the chance to discuss more about the efforts of Islamic development banks in this regard, and also we have with us some practical examples that we will share later on, various examples that you have highlighted in terms of supporting social finance through some Islamic instruments. So my second question will be addressed to Mr. Nabil Kesraoui, and this will be related to the role of regulators. So in Islamic social finance, so in your opinion, what is the role that regulators should play in enhancing the effectiveness of social finance? Over to you.
Thank you, brother, the invitation, and Assalamu alaikum wa rahmatullah, all the present, and thank you to CIBAFI for this Global Islamic Bank Survey this year dedicated to Islamic social finance, which is very interesting theme and in adequation with the sustainability and with the SDGs. To do not say the same thing as the first speaker, so I will begin with the structure of the Islamic social finance. So we know that Islamic social finance is part of the Islamic economy, and it contains a couple of industry, if we can say. So the industry of microfinance, as mentioned in the report, is very important. But this industry alone cannot achieve the impact desired and requested. So there is also the social finance based on zakat, and there is specificity of zakat in the disbursement where we can disburse the zakat. Zakat cannot finance microfinance, for example, as line of finance. So there is some fatwa about that. There is about Sharia compliant objectives. And also waqf sector, which is an industry which is not developed in the regulation of the Arab world. So for example, in Tunisia, we haven't awqaf, we haven't zakat. But if we can implement the framework, we can support the Islamic microfinance activities. And we have also sadaqat, and which is very important if we can succeed to digitalize the business model of sadaqah through platform to support Islamic microfinance. So based on the report of Al-Baraka 2022, the zakat collection is around $300 billion. Waqf, I don't know if is it under management or the total of the asset is around $100 billion and $300 billion for zakat. For the Islamic microfinance, there is no information clear about the active under management or the asset under management, but the statistics and the studies mention that only the 1% of the share of the Islamic microfinance regarding the global GLP, gross loan portfolio globally, which is equivalent to $1.8 billion uniquely. So these information, if we compare with the share of the poor Muslim in the world, which is around 30 or to 40%, so there is, it's not make sense. So for the moment, the Islamic social finance business model, activities, companies, organization cannot meet the demand of the poorest and of the youth on the ground. So to come back to your question, Rashid, the regulatory framework and standard, we can say 3 points. So first point, so we need to develop specific guideline, and it was mentioned in the report, to create regulatory guidelines that clearly define how Islamic finance principle can be applied to social finance projects. So if we compare activities on the ground, so we can find a lot and a couple of business models. So there is banks that provide directly microfinance, or banks that dedicate a budget for initiatives of housing, of education, and we can find dedicated department in the banks working on that, like the case of Libyan case that will be mentioned by Osama. And we can find also dedicated MFIs, microfinance institution, who do that. And these MFIs need to look for resource from banks. And these resources are very costly. So this should include criteria for social impact, ethical investment, and community benefit. So we must harmonize, do the harmonization of the different topic of Islamic social finance. We must also integrate social impact and metrics. So it's very important to highlight the impact of the Islamic social finance, either done by banks or done by dedicated department or done by NGOs or done by MFIs. So we must implement framework that require Islamic financial institutions to report on social impact metrics, similar to the environment, social, and governance criteria in the conventional finance. So I see that this is very important to do, and to highlight this sustainability activities through KPIs and metrics in the sustainability report. So we did this framework in Somalian MFIs, and we highlighted the job creation, the increase in the income through the Islamic micro loan, micro murabaha, micro ijara, etc. So the improving in living condition So what is the difference between before the loan, after the loan, before the intervention of the Islamic social finance and after the intervention of the Islamic social finance? Women empowerment. So we will not focus only on the number, but we will focus on the how things was done through the Islamic loans or the Islamic tool. So we must prepare also KPIs, and KPIs will be indicator that must be present by the chief executive officer or the executive direction to the board. The board of directors must measure and govern all these indicators in the report related to specific initiative of Islamic social finance. So the third point also is important to work on the regulatory framework of Waqf on Zakat organization to support the activities of microfinance or the activities of Islamic social finance. And we see that couple of countries, this framework is not operational like in Malaysia. So for the case of Tunisia, conventional bank Islamic, and to look for line of finance based on Mudaraba. And this Mudaraba is very costly, and it's the same range of the cost like the conventional bank. So at the end, we will offer an Islamic social offer, which is very costly. For the moment in Tunisia, the cost of the financing is around 30%, which is very, very expensive for the poor population. The second recommendation on the regulatory framework is, for example, to have tax and so we at the regulatory and the fiscal framework, we can give incentive, for example, exoneration for the banks who gives loan of finance or who offer line of finance as refinancement to Islamic microfinance, because Islamic microfinance is more social than lucrative. So it's an hybrid framework. So we must, for example, we can cap the rate of the refinancement of the Islamic banks to Islamic microfinance in order to have affordable prices at the end between the microfinance company and the beneficiary. And as discussed by Dr. Azmi, and I appreciate a lot the public and private partnership. So Islamic microfinance company or Islamic banks together cannot do a lot of things without this partnership with the government, without a guarantee fund to motivate these companies to move on and to structure product dedicated to Islamic social finance, because we know that the risk is very huge in this area. And we can have a reflection about blended finance facilities. And these blended finance facilities, it's a mixture between concessional loan to activities of microfinance / grant or guarantee fund to support the activities of microfinance in general. So also there is other thing that can be interesting to do competition and to award the more impactful activities in the world, in the Arabic world, in the Muslim world, and to assess the impact, we will need to have the impact management and measurement, and to have KPIs and metrics of these initiatives. And this is a good recommendation for the CIBAFI to launch this award about the best Islamic social finance in the Muslim world.
Thank you, Mr. Nabil. So now that we have an understanding of the link between Islamic finance and social finance, and also the various instruments that could be used to support social finance, as well as the role of the regulators in supporting all these efforts, I think that it's good to have a look at some case studies or practices that are implemented in various markets. So for that, we have with us Mr. Osama Bishari and Mr. Mohamed Fikri bin Harun, who can share with us the best practices from the Libyan and the Malaysian market in terms of Zakat and microfinance. I will start first with Mr. Mohamed Fikri to share with us the practices or the best practices in using Zakat for social financing based on the experiences of the institution that he's representing. Over to you, Mr. Mohamed.
Thank you, Brother Rashid. Thank you for CIBAFI for inviting me. Thank you for Dr. Abdelilah, Professor Dato Dr. Azmi, Mr. Nabil, Dr. Abozer, Mr. Osama, and all of us here. Assalamualaikum from Selangor, Malaysia. Thank you for Dato Dr. Azmi because of his muqaddimah on what is happening in Malaysia, especially in terms of Islamic social financing. So I'm here, will talk from the point of view of Lembaga Zakat Selangor, Malaysia. We all know that traditionally Zakat funds go directly to those in need. That's great. But why not stretch these funds to help even more people? That's where the innovative approach comes in. Alliance Islamic Bank, AIS, came to us actually with the idea of Zakat fund plus microfinancing plus Qard Hasan. So Alliance Islamic Bank together with us, Lembaga Zakat Selangor and Amanah Ikhtiar Malaysia started a Zakat microfinancing program called Azam. This program used Zakat Wakalah funds, which are portion of Zakat paid by Alliance Bank to Zakat Selangor and then returned to the bank to distribute according to our criteria. Instead of just giving out Zakat money, we provide it as interest-free loans to small business owners from the Asnaf community. These loans need to be repaid within a year. And guess what? The repayment rate has been 100%. This means we can reuse the same funds to help more people again and again. We chose to provide loans instead of grants to encourage financial discipline and responsibility. When recipient knows they have to repay the loan, they are more likely to use the funds wisely and ensure their business is successful. Loans also help build a credit history for Asnaf entrepreneurs, making it easier for them to access commercial loans in the future. This approach helps instill a sense of accountability and encourage a mindset shift from dependency to self-reliance. Here how it works, Rashid. First, the eligible Asnaf entrepreneurs receive micro loans, typically around 5,000 ringgit each. So these loans helps them invest in their business, whether it's buying equipment, raw materials, or expanding their operations. As the business grows and generates incomes, the entrepreneur repays the loan over a set period, usually 1 year. The repaid funds are then recycled to provide new loans to other entrepreneurs. This model allows the same fund to be reused multiple times, multiplying the impact. For example, if a fund revolves 3 times in 3 years, a single 5,000 ringgit measure can support 3 different entrepreneurs in that period. What happened after that? After revolving and supporting multiple entrepreneurs, the initial 5,000 ringgit is eventually disbursed as zakat to an Asnaf family, just completing the zakat obligations. So this program is not just about giving out loans. We also provide comprehensive support to these entrepreneurs. As I said just now, the collaboration is between Alliance Islamic Banks, Zakat Selangor, and Amanah Ikhtiar Malaysia. This is where Amanah Ikhtiar play their roles. Amanah Ikhtiar conducts training sessions to equip those Asnaf entrepreneurs with essential business and financial management skills. This holistic approach ensures they not only start their business, but also sustain and grow them. What I can conclude, Rashid, is that our approach in Malaysia has been about smart use of zakat funds. As I said, it's a combination of zakat funds. We give back to the bank who paid zakat to us through wakalah initiative, and then this wakalah or zakat funds used as a microfinance with the Qard Hassan concept. So this is how we are using the zakat fund smartly, and with strong partnership with 3 parties and a holistic support for small business owners. We have moved beyond just giving money. We are actually empowering people to stand on their own feet and fostering a culture of responsibility and sustainable development. That's it for now. Rashid, I pass back to you.
Thank you. Thank you, Mr. Mohamed. Thank you for sharing this example from Malaysia and this holistic view of supporting needed people, not only through zakat, which is used for microfinancing, but also to support this with also some technical support, training to ensure that the business is sustainable. And this creates more impact for the society and the economy. Now I can give the floor to Mr. Osama to share the experience of his institution in Libya with the focus on microfinance. Over to you, Mr. Osama.
Thank you very much, Rashid, and for the invitation, and for CIBAFI for inviting us to speak at the webinar. So before we start to speak about Namatamwil, which is the microfinance unit within Assaray Bank in Libya, let me allow me to just give you a little bit of background on Libya. Libya is currently going through a very dynamic shift, both politically and economy. The previous regime was somewhat of a socialist regime, and towards the end of its duration shifted toward capitalism, which was accelerated further by the change of government post-2011. So what's happening since then is the system is getting stuck, and we're trying to change it towards value creation rather than just consumption. Historically, the banks in Libya were not allowed to invest money on projects. They were only allowed to deposit the money within the central bank and receive interest on that, which changed post 2011. And what they were very active on was individual financing for consumption, to buy cars, equipment for home, furniture, and so on and so forth. Financing for projects was not one of the activities done in banks in Libya. All of that changed around 2014 with the introduction of laws to allow banks to invest in the local economy and local projects, and the introduction of the law prohibiting dealing with riba in Libya for all financial institutions, and which facilitated the conversion of all banking sector in Libya and towards an Islamic banking sector. Coming to the microfinance is a very interesting activity because it can be social and it can be profitable as well. And that depends on the institution doing it, whether they have the social impact component as the most important, or the profit component. We have many microfinance institutions around the world which more profitable than banks. On the other hand, we have microfinance institutions for running more than 30 years and they're not generating any profit. And the idea, as Mr. Mohamed said, you have to treat your activity as a profit generation to guarantee the sensibility of your business. Namatamwil was established in 2019 to create value for businesses in Libya, and so to create value for businesses in Libya and to encourage people to move towards establishing their businesses rather than just relying on the public sector for salaries and consumption afterwards. In terms of the best practices to use to guarantee the activity of microfinance in Libya. One of the key best practice was to focus on the businesses that create value, industrial services and agricultural businesses rather than trade. The building of value chain projects with more focus on social finance has been a very good practice for us. Taking care of our customers, understanding their needs, and developing products that suitably resolve their issues, and utilizing Islamic finance where you buy the equipment or the raw materials especially needed by them has guaranteed the sustainability of their businesses, which in turn goes back to our sustainability. Utilizing the social network and social power in Libya has been a huge factor and an indicator for us to guarantee the sustainability of the business and our customer success, and aligning our business strategy towards the government overall strategy for the next 5 or 10 years has guaranteed our success, because whatever we do is complemented by the regulator and what they are aiming to do and to change in the sector. I will stop here now to share more in the next question. Thank you.
Thank you, Mr. Osama. So building on these experiences, both of you, could you please provide details on the impact generated by these initiatives that your institutions have launched? We want to understand the internal and the external effects. So if there are any impacts on the institution itself, but also impact on the society and the different stakeholders, and how these impacts are measured. Perhaps I can continue, or I will start with Mr. Mohamed. Fikri.
Thank you, Brother Rashid. Okay, answering to your question. First, let's talk about the internal impact first. Our program that I mentioned previously about Azam has made our Zakat funds work harder and smarter. By using the revolving fund model, we ensure that the same funds are used repeatedly, benefiting more people over time. This has drastically improved the efficiency and sustainability of our operations. We have also streamlined our process by partnering with experts like Amanaitia, which has helped us identify and support the right beneficiaries more effectively. For external impact, Rashid, let me share a few real stories. One of our beneficiaries, a single mother running a small tailoring business, used this Azam loan to buy a new sewing machine and other necessary equipment. This allowed her to take on more orders and increase her income from 1,005 ringgit Malaysia to 2,005 ringgit Malaysia per month. With this additional income, she was able to send her children to extra classes at the tuition center. Of course, it enhanced their education opportunities. This is one case. Another beneficiary is a woman who started a business making traditional tapai. Tapai is our traditional food in Malaysia. She made this traditional tapai to support her family after her husband fell ill. With this Azam program or Azam loan, she bought more raw materials to expand her production. Her monthly income increased from 4,500 to 6,000 a month, enabling her to afford her husband's medical treatment for heart disease. These examples show how impactful the program has been for our Asnaf entrepreneurs. Actually, this initiative also have significantly boosted the reputation of Lembaga Zakat Selangor and Alliance Islamic Bank. For LZS, by creatively helping Asnaf, has attracted more Islamic bank to pay zakat, knowing that their zakat from Wakalah initiative portion can be used for these impactful programs like what we did with Azam. And for Alliance Islamic Bank itself, their reputation in corporate social responsibility has soared, showcasing their commitment to community empowerment. This Azam program itself has received recognition as the best Islamic financial inclusion initiative from the Digital Banker at the Global Islamic Finance Award 2024. Now, the question is, how do we measure these impacts? There are several key metrics that we track, Rashid. The first, in terms of their income growth, we monitor increase in beneficiaries' income before and after support. For example, we track how the income of the single mother and the tapai business owner increase after receiving the loans. That is one metric. The second metric is the repayment rates. We are ensuring the sustainability of the revolving fund model through high repayment rates. The 100% repayment rate indicates strong financial discipline and program success. Of course, this 100% repayment rate is part of the role played by Amanah Ikhtiar, which they not only provide the training, but they also monitor the beneficiaries weekly basis. That's why we achieve the 100% repayment rate. The third metric is the business expansion. We assess growth in the business operations like increased production capacity and also market reach. For instance, the tapai business expanded production significantly after receiving the loan. The fourth metric is the credit records. We check the improvement in beneficiaries' creditworthiness over time, helping them access further financial service. But of course, since these programs just started December 2023, some of the metrics still, we don't have any results on the metrics, especially on the credit records, because the programs just started last year. And the final metrics on how we track the impact is, of course, through the feedback and surveys, Rashid. We gather insights through feedback and satisfaction surveys to understand the broader social impact. We conduct regularly visits and interviews with those beneficiaries to collect their experience and feedbacks. After all, it is not just about immediate benefits. This program are creating a ripple effect. As beneficiaries succeed, they are more likely to contribute back to the zakat system. Of course, this will fostering a virtuous cycle of giving and empowerment. So I think to wrap up, our impact is measured through both hard data and heartfelt stories. This dual approach ensures that our zakat and microfinance initiative not only provide immediate relief, but also pave the way for sustainable, long-term growth and community development. That's all from me. Rashid, pass to you back.
Thank you, Mr. Mohamed, for this comprehensive answer and for sharing the experience of your institution. Over to you, Mr. Osama, if you would like to add any points on this.
Yes, thank you, Rashid. So for us, it's quite similar to Mr. Mohamed and what he's been doing. Fantastic job in Malaysia. What we currently measure is the impact of our activity on the macro scale rather than a micro scale. We have success stories, many success stories of small entrepreneurs who develop their businesses and increase their growth. However, one of the key challenges we face as an economy in Libya is the overcrowdedness of the public sector and the tendency of youth to seek jobs within the government sector rather than establishing their own business. And one of the core vision or core goals of Namat Tamweel is to encourage pursuing entrepreneurship activities rather than working for the government. And the number of people who have succeeded in establishing businesses increasing. The number of people who left a public job rather for a private business is one of the key criteria we measure, as well as the number of jobs created by our clients and created in the community. The repayment rate is a key indicator for the satisfaction of our services, of our clients, and their happiness with our services. The revolving loans, we have, I think, 33% of our existing clients have received a smaller loans before, and they're continuing in the cycle. We hope to increase that percentage even further. The sectors which we the percentage of sectors within our portfolio is a key indicator for the growth in those sectors. For example, agriculture has been one of the sectors which has not a great impact on the economy of Libya, and a lot of people do not pursue farming activities because it used to not to be very profitable due to the lack of knowledge in farming. That is currently changing, and our role in developing a specific product for farmers to allow them to generate profit from their activity has resulted in a great success within the economy, especially putting it as part of the value chain and connecting with large enterprise to purchase whatever they produce. And lastly, the number of beneficiaries, poor beneficiaries, single mothers, widows, and mothers who do not have jobs at all, either in the private and the public sectors, and the products we develop for them to encourage them to increase their economic activity is one of the indicators we use to evaluate our impact within the community. Thank you.
Thank you, Mr. Osama. From the experiences that you have shared, I think that compared to the needs of the social needs, perhaps there is a huge gap. That's why institutions or financial institutions like Islamic banks are not the only needed players in this context. So there is a need for support from other institutions such as development banks. So since we have with us a representative of Islamic Development Bank, so Dr. Abozer Mohamed, can you please share with us the initiatives from your institution to integrate social finance into Islamic finance and also to support these kind of initiatives?
Thank you, Rashid, and glad to hear from various speakers. First, actually, the ISDB is rated AAA by Standard & Poor's, Moody's, and Fitch. We are not bragging, but we are like one of the MDB's bank, continue having a very stable outlook and very positive rating. And we have a vast number of members, actually. We have 57 member countries spread around the globe. Some of them have like common factors, but mostly they have like pluralities of ethnicities, language, culture, and economic profiles and political systems. So we have a different members, and we have to understand the nature of each member. Also, our members that differ widely in level of human development. You will see like some of our members have stable, resilient countries and communities, while some they do have fragile one. But IDB need to understand, the nature of each member countries. And by hearing most of the speakers here, I have myself personally have seen those experience among the member countries we have been to. Right now in ISDB, we do have like a division for poverty alleviation and empowerment, which is work directly with different segments of the societies in our member countries, like women, youth, and those who are like doesn't have an access to finance, where they do like an actual project with them. While we, our department work on soft skills like regulatory framework, legal framework. And we work with the Central Bank of Libya, Central Bank of Mauritania. We have done a lot of work with Algeria for microfinance, SMEs, and WAF. We recently came back from Thailand, where we also try to develop regulatory framework for Awqaf. And we have seen the exact example presented by Brother Mohamed Fikri in south of Thailand, in Patani Estate, where the Waqf and the Ka play like a very vital role in increasing the wealth and life of people, Muslim people in south of Thailand. So we intervene in a very different ways, and we try our best to serve our member countries. So we have to link it again to Islamic finance. We all know like ISDB is the only MDB that adheres to Sharia principles. So most of our operation, if I can say like 100% of our operation is entirely based on Islamic finance, whether in financing, lending, issuing an instrument like Sukuk or any other form of instruments. Having said that, we need to also to go back of the issuance of Sukuk from Islamic Development Bank, whether green Sukuk for the environment or Sukuk for like alleviation of poverty and social finance. And that will always make sure like ISDB will utilize the proceed to maintain sustainable development and intervention in our member countries. Also, significant portion of ISDB development financing goes to infrastructure. And we know like social finance need like an infrastructure, a major enabler for inclusive address society needs and facilitate empowerment of women, youth, and poor. So the bank also has a unique instruments such as reverse linkages. We link developed countries with underdeveloped countries. And in that one, we do like make a relationship between various member countries. We transform fund and knowledge as well. And that is very important for us. Also, the bank has a unique instrument such as technical assistance, which as I was talking about. We do technical assistance to member countries where they need to develop Islamic finance. And that Islamic finance segment can be whether banking, takaful, capital market, awaf, zakat. Right now, we are doing like more than 5 projects for developing awaf and zakat in Mauritania, in Algeria, in Nigeria, and in Thailand as well. This is the countries I work on, but we have more than this one. We're working right now on them. So the solid history of engagement with ISDB is very clear for everyone. And also sometimes we have cooperation with non-governmental organization, and we work with another institution like IMF, and we've been supporting all other member of IIS like CIBAFI, IUFI, IFSP, IFM, and rest of the organization to make sure the Islamic finance industry have a solid support from the ISDB. Also, ISDB applies core principle for Islamic finance, which promote justice and inclusion and equality. We have to understand all those kind of things is also being applied by ISDB. So we usually try to reach most marginalized people, especially women, poor and needy, thereby leaving no one behind and making sure the whole societies in our member countries are living in a very good way. Moreover, ISDB is the only South Regional Development Institution. As you can see, and most of the participants know that most of MDBs are located in north of Hemisphere, except ISDB, which is South Regional Development. So the specific mandate for us is to foster economic and social development in the Muslim world. By doing that, it has a vital role to play not only within member countries but globally. And achieving the goals of the Global Development Agenda by 2030 is relies heavily on increasing social finance. So by doing that, we need to make sure like all the items has been achieved, and also we have to focus our investment in sustainable development to stimulate global growth for our member countries in South. So by doing that, we will protect our vulnerable populations and leaving no one behind, as I mentioned before. Finally, also ISDB provided technical assistance, as I mentioned, for member countries. So any countries feel that they do have to update the regulatory framework for banking, for takaful, for capital market, for microfinance, zakat, and waqf. They can simply request from ISDB, and it's grant. So usually grant, it's a free technical assistance. We will go there, we will try to update regulatory and legal framework to cater for Islamic finance need, because we know Islamic finance need a specific regulation to fit within the current conventional atmosphere. Those DAs are mostly in form of grants, as I mentioned before, to develop the industry and to support Islamic finance, which is includes social finance and its broader term. Thank you, Brother Rashid.
Thank you, Dr. Mohamed. From the report findings, we noticed that Islamic banks or some Islamic banks are doing some efforts with regards to supporting social finance. We have seen examples today in Malaysia, Libya, and also in terms of efforts from the Islamic Development Bank. But of course, there is also a gap. There is a room for improvement and to do more. So perhaps my last question in this panel will be addressed to Mr. Nabil. So what are the policy changes or strategic recommendations that could be proposed to enhance the involvement of Islamic finance with all its sectors in social finance activities? In 4 to 5 minutes, please.
Thank you, Brother Rashid. The policies changes and the strategic recommendation based on all things discussed today, and I appreciate a lot all the speaker intervention. So number one, so we did not have only one instrument needed to support microfinance or to support Islamic social finance. So we need to have the business engineering to tailor financial services different for different needs and in the different countries. So this Shimi presents the experience of the Islamic relief worldwide. So at the bottom, we have the poor individual who lack assets or the ability to work. So for these people, they need to be supported in the beginning before going to microfinance by zakat, by sadaqat, so we can leverage these activities by technology, by crowdfunding, for example, based on grants. So after that, we have the extremely poor with the ability to work, but with no asset. And we have the basic need and asset building. So for this population, for this poor population, they will need Qard Hasan, and they did not support the margin of murabaha of 20%, of 30%, like the case of Tunisian case. After that, we have the landless tenants and the small landowners. So they will need to be funded in their activities, to have the land to plant agriculture activity with ijara or with salam. And after that, we have the micro entrepreneur, and that can be supported by free interest loan based on Qard Hasan or concessional murabaha, mudaraba, musharaka, etc. So, and at the end, we have the SMEs that can be financed with different instruments. So for the case in Tunisia, for example, we have only murabaha. So with murabaha, we have a constraint to support all this spectrum of activities and the needs. The second point is to diversify types of institutions that provide social finance. So we cannot attend the entire population of the poor people, of the youth, of the women, with lucrative activities. So we have the activities of microfinance institution in Tunisia, for example, and the case of Namatawil in Libya, which is lucrative. So there is margin of murabaha, there is the margin of ijara, etc. And in this framework, we have financing line from banks or dedicated department with Islamic banks. Now, the first case is the case of Tunisian Islamic microfinance done by Zitouna Tamkin. And the second case is the case of Libyan. We have a department dedicated for microfinance, and this department uses the resource of the bank, and the resource of the bank are not for free. So there is a cost here, the cost of funding. There is also the activity of microfinance bank, the case of Amal Microfinance Bank in Yemen, which is non-profit bank without distribution of dividend. So this is the case which more impact. So if we can develop framework for banks without the dividend, or this activity is not lucrative, so we have more impact for the poor population. And the third case is very important, the non-profit organization, the NGO, that can be supported with the private sector, with banks, with telecom communication company. Now the case of Jana Center in KSA, which is supported by Al-Rashid Development Foundation and a couple of companies. So this is the last business model for me is the more impactful, is the more social and can achieve the sustainability, the sustainable development goals. So in this case of Jannah, so Rashid and all the partnership done can support the management fees of the activities of microloan. And so at the end, there is Wakala of Jannah Center to develop microfinance activity with women. And at the end, there is management fees that will be invoiced by Jannah Center to Rashid Foundation. And this management fees will cover the entire management fees. And in parallel, the Rashid Holding finance a revolving fund free of charge of Qard Hassan. And like said by Brother Mohamed in the Malaysian case of the fund of Zakat, it's a revolving fund. So it's not recovery, but this ensure that there is a good recovery at the end through the woman. So the use of the fund will be through Qard Hassan, individual or collective, for women without guarantee. So as you see here, when we have the microfinance structure is supported by the line of finance free of charge. There is no cost of finance, and also the cost of risk is supported by the partner of Rashid, either the cost of risk. So the Jannah Center will focus more on the operation, and all the entire management fees are supported. But this is sustainable for Jannah, and it's create the impact design. Donc, I finished by the product innovation, and all things are said by the speaker. Donc, we need to develop fintech solution to support with the digital tools the activities of microfinance, the activities of cash waqf, for example, the activities of the collective zakat, etc. And the platform IRW is very important. Based on sadaqat, we collect the fund which will be offered in form of Qard Hassan to the poor population. Social sukuk was also mentioned by the speaker of ISDB, and it's very important to launch the social and green sukuk, to have the resources needed to create the impact desired by the country. I discussed about the waqf-based models also to use the income of the waqf in some initiatives, for example, affordable housing, healthcare and education. If I take the case in activities of microfinance, we are not focusing on the healthcare or the social housing, because the social housing is very costly. So if we need how to support this activity through microfinance, through the real waqf, the income of the waqf, we can create the impact. And I know that the social housing is things very important. The zakat also can be used to support, for example, to repay outstanding debt of insolvent debtor too. Also as Bab al-Gharinin, we know that zakat can support Bab al-Gharinin. So we can also zakat support the first payment supported by the entrepreneur. So this needs some business engineering in Sharia compliance activity. And I know that some position of ulama said that the zakat must be dispersed directly to the poor. But this, I appreciate a lot the framework done in Malaysia, because there is a changement to go from social activities to sustainable and to economic empowerment activities. And at the end, we can also structure credit guarantee fund based on waqf or based on zakat to encourage Islamic social finance to move on and to reach the poorest of the poorest. Because for the moment, the microfinance activities is based on the guideline, on the internal guideline, based on collaterals. So if the poor did not have and cannot provide the collateral, maybe his activities is sustainable, the company will not provide him the loan. So here we need to create another innovative guarantee fund, and we can digitalize its activities by technology. So we can, which with this couple of solution, move more with the Islamic social finance, not only with banks, because banks, and like I say, the question in the chat, the business model of the banks is totally different from the business model of the microfinance. So we have the same segment, and for that, banks, as from my side and my experience, must support microfinance through the CSR policies of the bank. And this support must be done through line of finance with not a huge cost of fund, but with cost of fund, for example, 1% or 2%, or maybe with credit without interest to support microfinance and to support Islamic social finance.
Thank you, Mr. Nabil. And I would like to thank all the panelists and speakers for the insightful contribution in this discussion and this webinar. So before closing this the webinar of today, so I will just take a couple of questions, and there is one question in the chat which I can or rephrase in one sentence. So what is do you think that the involvement of Islamic banks in microfinance would impact the business of Islamic microfinance institutions? Will this create some kind of a negative competition between Islamic banks and microfinance? And what role will play Islamic banks to support Islamic microfinance? Part of this question was answered by Mr. Nabil just now, and I will address this question to Dr. Mohamed to develop further, and then perhaps to hear from the experience of Malaysia with Mr. Mohamed Fikri.
Sure. Thank you, Brother Rashid. Actually, this question is very common for us. I mean, whether when I was at Central Bank and when I moved now to ISDB. And in ISDB, we have the chance actually to see the different views from central banks and Ministry of Finance. As the brother rightly mentioned, that in most of the cases, you will find microfinance is right on the hand of the Ministry of Finance, where they have the authority to create a microfinance institution. But from the experience itself, we notice actually when mostly you have this kind of conflict where you have like microfinance institutions, and those microfinance institutions are allowed to accept deposit and give finance, then they will fall under the definition of banks, and then they automatically have to fall under central bank, where they have regulation for liquidity, threshold, capital adequacy, risk weighted, and all those kind of issues. So here they will have themselves in very disadvantages. When they fall under Ministry of Finance, usually they will have no access to fund, because Ministry of Finance, maybe they will give them fund for like a few times, but the model itself will not be very efficient, because Ministry of Finance every time inject cash and fund to the microfinance, and then they will give it, and then it become default most of the cases. But efficiently is like when we see like a microfinance fall under central bank, the structure itself, the paradigms of the work usually will have more successful story than when it fall under Ministry of Finance, because first, they will have tap to access to fund, because they will accept fund from different participants and even from commercial bank. And then the business model itself will be profitable, because they have to maintain profit, like administrative costs and everything else supposed to be met within. But the main question actually over here is like, are we just want Islamic banks to be profitable and not to burden themselves by any social cost, by funding small business entrepreneur? Do we just only want Islamic banks to be profitable and lucrative business, or we want them also to hold some responsibility and to contribute to the country development and to give finance to small segments? So when we answer this question, and we know exactly Islamic banks need to be involved in the development of the country and to provide any kind of services to women, youth, and SMEs, then we would like to encourage Islamic banks to tackle some kind of microfinance. Some cases, and here we have actually shared it with a few countries like in Algeria and other countries, if Islamic banks don't want to burden themselves with microfinance activities because they don't have expertise, they don't have enough number of staff, they don't have, you know, all those kind of things. So Islamic banks, they can channel their fund to an institution, microfinance institution. So central bank, by giving an order, maybe like 2% of their portfolio, according to the size of the bank. So each bank should contribute a certain amount for microfinance activities. By doing that, first, Islamic banks will release themselves from the burden, because they will not burden anything, no capital adequacy, no charges, nothing. The fund will go directly to microfinance. Microfinance entities, they do have the expertise, they do have the skills and everything, and they will do it. At the same time, we ensure like Islamic banks are contributing to the social finance, to the microfinance. So it will be win-win for both organizations. Islamic banks will share. At the same time, they will not be burdened by the huge risk of microfinance. So both sides can benefit from this one. And by saying that, this model is very useful, but also we need to have like a very updated regulatory framework. And also we need to have an involvement from both sides, Ministry of Finance and Central Bank together. So by doing that, we can make, you know, win-win situation for both sides.
Thank you, Dr. Mohamed. Mr. Mohamed Fikri, do you have any points to add on this?
Sorry, Brother Rashid. The question that you asked is regarding which one in the chat room?
Yeah,
Is it
regarding the
relationship
regarding the relationship between or the role that Islamic banks could play to support microfinance institutions, because one of the participants think that this could create a negative impact on the business of microfinance. So from the experience of your institution working with an Islamic bank, so can you share any insights on this point?
Okay, to be fair, Mr. Rashid, because I'm coming from the point of view of Lembaga Zakat Selangor, so perhaps maybe Dr. Azmi coming from maybe he has more experience or knowledge regarding the Islamic banks in Malaysia compared to me. So perhaps I just need help from my dear friends from Malaysia, since I'm coming from Zakat. So we have not enough information regarding these questions on the Islamic banking in Malaysia.
Okay, thank you. Yeah, Mr. Osama, is there any points that you would like to share on this?
Yes, as Dr. Abozer just mentioned, having the central bank enforce the commercial banks to dedicate a percentage of the portfolio towards a specific types of activity benefits the microfinance significantly. For example, in 2021, the Central Bank of Libya has mandated that all banks must have at least 20% of their portfolio of financing towards the support of MSMEs and 10% towards the support of individuals. And and provided a very short timeline to adhere to these restrictions. So what our bank did, and our bank used to be a bank which targets the wealthy of the population, not small businesses or very few or the poor of the population.
Poor people, yes.
So yes. So what they did was using the unit of Lama Tamweel, which is the microfinance, to meet the requirements of the central bank, and they loosen a little bit on the requirements of financing while maintaining the concept of profitability and due diligence for the beneficiaries. That mandate from the central bank has facilitated and accelerated our growth significantly. So I just wanted to emphasize on Dr. Mohamed Abozer point and to give you a clear example of how that could facilitate further financing or microfinancing.
Sure, thank you. And with this support from the central bank, do you see any interest from other Islamic banks or from the other players to open similar units to support other segments through microfinance?
Yes, because the central bank has also mandated all banks in Libya to establish an SME unit and to start the activity as soon as 2024. And all the banks are now looking to do the same. They did not believe that this could be a profitable endeavor. And now, after seeing what we have done, they started to believe. Also, to maintain the mandate by the central bank, they are exploring how they can best provide microfinance for the clients. Some of the huge banks in Libya would unfortunately have an unsuccessful activity in the future because they do not understand the value and the sector, and they will start just to meet the mandate made by the central bank. However, I think the private banks would have a successful stories in the near future in Libya.
Thank you. Yes, Mr. Nabil.
Thank you, Rashid. Based on the thought of Osama and having the experience, because I worked on the framework of Nama Tamwil with Osama and all the team in 2019. And what I recommend through my this intervention, that CIBAFI collect the different business model of the Islamic social finance in terms of efficiency, in terms of impact, in terms of profitability, of sustainability, etc. So as expert in financial inclusion and having following the experience of Zaytuna Tamkeen during a couple of years in different positions, I know that we cannot be profitable and impactful in the same time. So we will look for profitability for the results for the shareholders. So it will be, the service will be very costly of the Islamic social finance. So the framework done in Libya for the moment through department dedicated to Islamic social finance, surely it's an innovation in the Libyan market, but is it the best way to do things? This is the question to be highlighted. So is it more efficient to look for structure dedicated for this business work? Because this is a knowledge very different from the knowledge of the banks. And I think that Osama have the experience because he is in the activities now. So what I recommend that the different framework done all over the world, if possible, that must be highlighted through NGO, through MFIs, through initiative of banks, through department of banks, through line of finance of ASDB, and there is another activities of Islamic windows in cooperative in South Africa. So there is like 10 business model without saving, with saving, etc., and all the different framework and negatively the efficiency and the impact on the poor population. So I hope that we have a study about that. I find some answer in the report, which is very important. But I think that if we can highlight all this business model in one report, it can be interesting. And thank you for this webinar.
Thank you, Mr. Nabil. And ladies and gentlemen, we have now come to the end of our webinar. We would like to thank all the speakers that have joined us today for their valuable insights shared and the fruitful discussion that covered various aspects of this topic. So just before ending, I would like to request the speakers to be ready for group photo. Thank you. We'd like to thank the audience and the participants for their attention and for the active participation. Please visit CIBAFI website and follow us on social media platform to be updated on CIBAFI activities and initiatives. We thank you again, and we look forward to seeing you in our future events. Thank you, and have a very good day ahead. Thank you.
Thank you. Thank you, everyone.
Thank you
And
very
have a
much.
good day.
Thank you.
Thank you.
Thank you.
Thank
Bye-bye.
you, everyone. Assalamu alaikum.
Salam wa rahmatullah.
السلام ورحمة الله. شكرا جزيلا.